why investment is a long-term game, and how to think like an investor. One of the biggest misconceptions about property investing is that it's a quick path to wealth. A lot of first-time investors expect to buy a property, wait a couple of years, and see massive returns. And while it's true that some markets have short bursts of rapid growth, the reality is that property is a long-term game. If you want to build serious wealth, you have to think in decades, not months. Property values move in cycles. There are periods of strong growth, periods of slower growth or stability, and sometimes small dips. These cycles can last anywhere from a couple of years to more than a decade, and they are influenced by things like interest rates, economic conditions, and supply and demand. Over the long term, these cycles tend to trend upward, but that upward movement does not happen overnight. Let's put it into numbers. If you bought a property for $500,000 and it grew at an average of 5% per year, after 1 year, that's $25,000 in growth on paper. Nice, but not game changing. After 10 years, that same property could be worth over $800,000. Hold it on for 20 years and you're looking at $1.3 million. That is the power of compounding growth. Each year, your gains build on the last, and the jump gets bigger the longer you hold. Everyone's heard the stories of someone who bought in the right area and just held on. One of our own clients did exactly that. In 2019, they purchased an investment property in South Australia for $375,000. They did not try to flip it or chase the next hotspot. They simply held onto it and let the market do its thing. Today, that property is worth around $720,000. And because of the equity they have built in just a few years, they've been able to leverage it to keep growing their portfolio without having to start from scratch on a new deposit. This is how portfolios grow, not overnight, but through consistent steps over time. Thinking like an investor means focusing on the bigger picture and not getting distracted by the noise. Interest rates will rise and fall, the media will talk about booms and crashes, and some years the market might barely move. The investors who do best are the ones who keep buying in areas with strong fundamentals, such as population growth, infrastructure development, and healthy rental demand. They understand that the slow years are just a part of the journey. Long-term investing also gives you flexibility. As your properties grow in value, you can refinance to access equity, renovate to boost returns, or diversify into different markets. You can adjust your own loan structure, move from interest only to principal and interest when the time is right. The biggest reason people get stuck is impatience. They buy, expect instant results, and when growth slows, they sell. Or they panic when interest rates go up and miss the chance to ride the next growth cycle. Property rewards patience. The people who buy well, manage their cash flow, and hold through the inevitable ups and downs are the ones who end up with real financial freedom. So if you're just starting out, stop thinking about how much you can make in the next year and start thinking about what this property will do for you over the next 10, 15, or even 20 years. The decision you make with that mindset are the ones that will actually change your financial future. So if you like this video and want more property tips, be sure to like and subscribe to this video, and I'll see you in the next one.